Hey everybody, it's Jeremy Whaley here, and in this video we're going to talk about the future prices of gold and a little bit about silver and whether it's something maybe you might want to consider for your portfolio. Are we really looking at $10,000 an ounce? Are we looking at $20,000, $30,000 an ounce? Or is gold and silver about to collapse as maybe we've been led to believe over the last couple of weeks here? We got a lot to talk about. A lot of you are interested in it, so hang on. Let's go. Hello everybody. It is Jeremy Whaley here from Trade Maestro with another video to share some great financial insights about what's going on in the world. If you've not checked us out over at trademaestro.com, go check us out. This video is something that I've talked about for many months in my private groups, but I've never put it out on YouTube. And based on a lot of the comments I got this week related to my video on the dollar, and then a lot of the feedback I've gotten from Scott Young's group, I wanted to do this video. So regardless of where you're coming from, I think you're going to find this a really interesting video as we talk about the future prices of gold. Now, unless you've been living under a rock, you've probably seen all these people that are putting out all these pie in the sky projections for gold and silver and crypto and all these alternative currency assets that people are promoting. And in many cases, the price projections just don't line up with anything that our brains can conceive as practical. So I'm not going to talk about crypto, not going to talk about Bitcoin or XRP or any of that today. We're going to focus in on gold, and specifically what could the future prices of gold be, especially if we get into a future economy where maybe our currency is backed by gold. Now, regardless of where you are in your economic journey, I'm just going to kind of share some stuff with you, and you can choose to believe it or not. But what I'm going to share with you is going to be factual, because I'm going to show you from history what gold has done in a gold-backed economy. Okay, so again, regardless of where you are, I'm going to kind of drop some bombs here. Okay, many of you know this, but some of you don't know. We're about to go back to a gold-based system. Okay, and if you don't know that, then just hang on. In the next several weeks and several months, this is going to become clear to you. You can already see it's happening in Russia. Russia's already had to go to a gold system. The BRICS nations, if you've not looked into that, BRICS, BRICS, Brazil, Russia, India, China, South Africa. This has been going on since 2009. They are creating a completely different banking and basically world reserve currency system as a parallel to what the central banks, Federal Reserve, IMF, what they've done and basically run the world with for the last 100 years or so. So Brazil, Russia, India, China, South Africa, they've got that going. Those are the BRICS countries, and that is taking over. And there's other stuff that's going on as well. But at the end of the day, here's the thing you need to know. The fiat currency of the central banking system that's been running the world, that's the European Central Bank, Federal Reserve in America, Bank of England, et cetera, that central banking system is basically on life support right now. And you're seeing that playing out. And where this is going is we are going to be on a gold system. Okay, boom. I just said it. Now, if you don't believe me, that's fine. You can go out there and research whatever you want to research and think about it however you want to think about it. Now, the question that I want to address is what happens to the price of gold once we get into a gold-backed system? When our currency is backed by gold, is gold really going to skyrocket? Because a lot of people are out there saying right now that once our currency, once the dollar or the British pound or whatever currency you're trading in your country or you're using for trade, a lot of people are saying when those currencies are backed by gold, then the demand for gold is going to be through the roof. Therefore, the price of gold is going to go through the roof. Is that true? And here's the answer. No. You can stop the video right now. No, it's not true. The price of gold is not going to go through the roof, and I'm going to prove it to you right now. In fact, to think that the price of gold is going to skyrocket after we adopt a new gold standard is naive at best. How can I say this? How can I prove this to you? I will show you with factual data right now. Boom, let's come to the charts. What you're looking at is a chart of the price of gold priced in US dollars. Now, if you've never traded currency, you've never traded gold or anything of this nature, what you need to understand is the chart you're looking at is the underlying asset. So when we talk about currency, you have a base currency and you have a quote currency. The base currency is the underlying asset, and the quote currency is the currency that you're buying it in. So if the euro is the underlying asset, then you would quote that in the US dollars, and you might say that it's $1 for €1, which is about what it is right now. It used to be more like 1.31 or 1.3 US dollars for €1. Well, let's convert that over to gold. This is a chart of gold. And if you think about this like a currency chart, here's the way you would write this. It is GLD, that's gold, is the base currency, and the quote currency is the US dollar. So here's the way that this is going to work out. 1 ounce of gold equals, and then here's the quote, whatever the quote currency is, and that is the current price. So the current price for gold right now is approximately $1,600 an ounce. It's a little bit more than that. Okay, so $1,600 right now is how much it would take you in US dollars to equal 1 ounce of gold. Now you can look at the price of the gold chart here, and you can say, my goodness, over the last many years, the price of gold has skyrocketed, and you are correct. From the year 2000 forward, back in 2000, gold was just below $300 an ounce. And until current time, we're currently around $1,600, but we actually peaked out up here over 2000, almost at $2,100 an ounce, okay? So that is a substantial increase in the price of gold over the last 20 years. Now you can see we've had some dips in here. One of those dips was the one that a lot of people didn't think was going to happen. That was the season following the 2008 financial crisis. Following that season, we peaked out around 2011, 2012, and then we actually moved from $1,900 an ounce all the way back down to $1,100 an ounce before the gold bull market picked up again and started to continue. All right, so there you can see very easily why people would be excited about the price of gold. Because if all you do is look at the chart, and if you were to correlate that and project that in the future, you say, if gold just continues on this rate, then obviously it's going to be worth $3,000, $5,000, $10,000 an ounce in the future. And if there's a lot of demand for gold, then certainly it's going to go up in value. That piece of the logic is correct. But where the logic breaks down is in this issue of the gold standard. If you apply a standard, what happens? We now fix the value of something to something else. It's now pegged to the same. So if we have the US dollar being backed by a gold standard, what changes? Well, what changes is this fluctuation. You see, gold did not become more valuable. This is really hard for people to understand. Gold never becomes more valuable. I don't have any gold here. I happen to have a couple pieces of silver, so I will use my visual metaphor here for silver since I have it. And silver and gold, this is what we call God's money because it was here before. 1 ounce of silver is always going to trade for 1 ounce of silver. I could take this same 1 ounce silver piece from 2022, and I could go back to 2,000 years ago, and if I stacked 30 of these up, that's how much Judas betrayed Jesus for, 30 of these pieces of silver. Okay, 30 of these. The exact same. Today, that's not worth very much. It wasn't worth a whole lot back then either. That's why it was such a painful betrayal, right? Because 30 pieces of silver today in 2022 is exactly worth the same as it was 2,000 years ago. It's worth the same as it was 5,000 years ago. And you can go throughout history, and it's the same as it will be worth 10,000 years from now. 1 piece of silver, 1 ounce of silver, will always trade exactly for another ounce of silver. And the same is true for gold, and the same is true for copper or anything else that we trade in that relationship. 1 ounce of silver will always be worth 1 ounce of silver. So you say, how could it be that when we look at the price of gold keeps going higher and higher? Obviously, gold's becoming worth more, right? No. What's happening is the dollar is becoming worth less. The buying power of the US dollar has gone down over the years. Gold did not become more valuable. The US dollar became less valuable. So now, understanding that principle, what you're seeing in this chart is not the increase in gold. We don't trade suddenly 1 ounce of gold in exchange for 2 ounces of gold. We're not doing that. Gold did not become more valuable. What changed is the value of the dollar. The dollar became less valuable. It takes more of those US dollars to buy an ounce of gold than it used to buy. So what happens in an economy if hypothetically we were suddenly to repeg our dollar to an ounce of gold? Well, it's not hard to understand. Gold doesn't suddenly become worth more. It stops moving. Yeah, it's what I said. It stops moving completely. The value stops changing, and I can prove it to you right now. Let's jump into the time machine. We're going to go way back in history, and you're going to notice on the chart here that it was around 1971 where gold started to become very interesting. You're looking at the spot prices of gold here, and around 1971, this is when Richard Nixon took us off of the gold standard in the United States. Now, if you don't know your banking history, the first step of this removal from the gold standard actually became the depegging of international currencies to the US dollar. This was what we came up with in the Bretton Woods Agreement following World War II. So in World War II, at the end of the war, there was something called the Bretton Woods Agreement, where all these international currencies, the sterling, the Swedish krona, all these different international currencies, they all pegged to the US dollar. And they said since the dollar was backed by gold, these other currencies were essentially backed by gold because they were pegged to the US dollar. Well, then Richard Nixon did something without the approval of the American people, without the approval of Congress. He took us off of that pegging. That was the first thing. First thing he did is he said you could not convert those international currencies for the same rate of U.S. currencies. And then about 3 or 4 months later, he completely depegged the U.S. dollar from gold. You say, well, what happened before that? To understand your history, see, this is the way our whole life has been. For my entire lifetime, we've been on what we call a fiat currency. There's no backing to our money. But if you go back far enough, if you go back over past 1971, if you go back onto the chart here, which we're going to do, you're going to notice that the value of gold was much different in the 60s. Let's move our chart here. You notice something weird about that line? It doesn't move, does it? No, because the value of gold was pegged at $35 for 1 ounce of gold. And it did not change. Sure, there might be some small spreads here and there, a few pennies here and there because of, various trading issues, but all the way through history here, back to the 1930s, when they pegged gold at the standard of $35 an ounce, the price of gold stayed. Okay. Now, I clearly pulled up the wrong chart because the other chart I normally pull up for this is, it also shows all the way back to like the 1800s. But if you look on the other chart, and I don't know which one I pulled up here. Sorry about that. Oh, here it is. Here it is. I was just off the chart. There it is. Okay. Sorry. It was here. I was just zoomed in too much. Now, if you look back at the history here, you see a major change right here from 1934 until 1931, gold was $19 for 1 ounce. 1 ounce of gold cost $19 for all those years. And then when Roosevelt confiscated the gold, they took all the gold in, said, here's pieces of papers for it. Then they came back 3 years later, 1934. They said, you can now buy it at $35 an ounce. What did they do? They devalued the U.S. dollar. But they repegged it to gold. And so while it was a devalued dollar, at least there was substance behind it. And what you can see in the chart is when the dollar was pegged at $19 an ounce, gold stayed flat. And then whenever the dollar was pegged at $35 an ounce, gold stayed flat. And it did that for 50 years. Until 1971, when Richard Nixon took us off the gold standard. And what happened? From that point forward, since we were in a fiat system instead of a gold-backed system, from that point forward, the price of gold appeared to become more valuable. Did it really become more valuable? Well, not necessarily. No. What really happened is the dollar became less valuable. 1 ounce of gold, 1 ounce of silver will always trade for 1 ounce of itself. Okay, because it's fungible that way. That's the economic term for it. So what I want you to understand about this is I am a fan of the gold standard. I believe that that's where we should go. You just need to understand that if you are buying gold right now, in the belief that when we go back to a gold-backed system, that gold is going to skyrocket. I don't think there's reason to believe that. I think that that's bad economics, and I think it's a fallacy. And I think you see that very clearly in the chart, that whenever you're pegged at a gold standard, because that's what a gold standard is, when you're pegged at a gold standard, it means the price of your gold doesn't keep going up and the price of your dollar doesn't keep going down. They are tied to each other. And so unless there is a new economic system that builds in some inflation, where they maybe could they come up with a system where they say it's going to be gold backed, but we're going to allow for 2% inflation a year? Well, maybe. And then you would know that if you buy gold, it's going to increase in value relative to the dollar by 2% a year. Okay, maybe that would happen, but you're not going to see, pegging of the dollar to gold at, hypothetically $2,000 an ounce, whatever they choose to do it at. You're not going to see that pegging and then see the value of gold go up. It's not going to happen. And anybody who tells you different is just economically ignorant, because the very nature, yes, I said ignorant, the very nature of pegging the US dollar to gold, having a gold-backed currency, the very nature of that tells you that there is no fluctuation. Whenever you have $20 worth of anything, you can go to the bank and you can take out $20 worth of gold, or you can take out $20 worth of cash, because that's what gold-backed means, okay? Now, the question that a lot of people ask me is they say, well, what's going to happen with silver? So if all this is going to go down, what's going to happen with silver in the process? And the answer is silver could fluctuate. Ooh, that looks very fluctual. I think I made that word up too, fluctual. Silver could fluctuate. Let's go back in time here. You're going to notice, let's just kind of look 1970s moving forward here. 1971, silver was about $2 an ounce. And by 1980, silver was trading at $48 an ounce briefly. And then it came back in line. And silver, for the most part, has been definitely a lot cheaper than gold. But silver has a bit of a utility factor that gold doesn't necessarily have. I don't know that I buy into this idea that gold and silver will be on par. I find that hard to believe, but it is possible. And I'm not going to say it's not going to happen. What I will say is we can go back in history, and what we can see going back to 1903 is we can see that silver fluctuated. I don't know if you can see this on your chart. I hope you can. I can see it on my screen. I'll just kind of draw some of it out here. In 1803, silver was right where I drew it on the chart here. It was about $1.30 per ounce. By 1900, it was down around 50 cents. Okay, so it was worth a lot less. And it fluctuated quite a bit through here. By late 1918, 1920, it was up to around $1.10. And you can look on here and see, I'll just kind of mark them. These are the different marks that you've got in the history of the price of silver. These are not insignificant price moves. I mean, these are substantial price moves. So, all the way through for 200 years before we got into the current central banking system, you see quite a bit of movement of silver versus the US dollar, which leads me to believe, even though this was before my time, it leads me to believe that in a future system, let's assume that the US dollar is backed by gold. Let's assume the euro and other currencies are backed by gold. I still see that silver could fluctuate quite a bit. And we see on here, it could be, 50 to 100% or more of its present value. Now, does that mean that it's going to go from our current silver prices of, $16, $17, $18 an ounce? Are we going to see it trading at $1,800 an ounce? Maybe. I don't know. I'm not going to say that it's not going to happen. I can't say that it will, or I can't say it won't. If there were a precious metal that would move, it would be silver. And I am a fan of silver. As you can see here, I actually hold real physical silver. I also represent a company that sells silver, so I'm a fan of that. Personally, that's just me being fully disclosed in my own personal dealings there. I have no problems with physical gold. I think it's great. If you want to put your IRA in physical gold, great. Just don't believe the delusion, and it really is delusional to believe this idea that the US dollar is going to suddenly go to a gold standard and then gold is going to skyrocket. That is just delusional thinking. It's not going to happen. And anybody who tells you otherwise, they're just, like I said, economically ignorant. That's with gold. With silver, it's possible. I'm not going to sit here and promise it. I am going to say it's possible. We just looked at the history going back to 1803. We see that silver moved from $1.30 as low as 50 cents, at one point as low as 30 cents on the chart here. So for many years, for 200 years, silver fluctuated a lot while gold was stagnant, while it was flat. So yeah, it's absolutely possible. And if there is a metal that's going to skyrocket under a new gold-backed currency system, I think it would be silver. So that's my speculation. That's not a recommendation to go buy silver. That's just purely my speculation and my belief on it. All right, I hope this has been helpful for you. Maybe in the future we'll do the same kind of discussion for cryptocurrencies and some of those other things. But just understand this, and I'll just kind of put this last bullet point on here. If your US dollar is tied to gold, and if gold is tied to the US dollar, gold will not go up in value anymore. That is just an economic fact. And to believe otherwise would just be to believe a delusion of something that's just not true. So there you have it. There's a factual answer. And I hope this has been helpful for you. If you've not subscribed to my YouTube channel, please be sure to do so over at Trade Maestro on YouTube. It's YouTube/Trade Maestro. Some of you are watching this on my channel, so obviously subscribe. If you happen to be watching this over with Dr. Scott Young's channel, be sure to subscribe to mine as well. It helps me. It helps him. And then you'll be sure to get all my updates, because I don't send everything over to Scott. You get my market updates and all that kind of stuff that I do on my channel. And then you get the stuff that he does over on his channel. And for those of you who are over on my Trade Maestro channel, hey, go check out what Dr. Scott's doing. He's got some really great stuff, especially as it relates to the new economic system and some of this gold-backed stuff and all of that new stuff. Well, Scott's the guru for that. So go check out his stuff and subscribe to his channel. And together, maybe we the people, the little guys, maybe we can figure out everything that's going on. All right. Thanks again for watching. I hope this has been helpful for you. And like I say, stay tuned, because there's a lot of new stuff coming up and you're not going to want to miss any of it. Until then, happy trading to all of you, and we will talk to you soon.